And I'm going to just go ahead and share my screen now, and we'll just jump right into this, and I'll show y'all how gold has been. Gold kind of upset me this week because she did exactly, if you watched the live on Tuesday, she's doing exactly what we talked about. So when you see like your currency pair, whether it's GJ or UJ or whatever it is, USD, JPY, and you're at these major levels, like for gold, let me just show y'all what I'm talking about. I'm going to go out to the monthly. Let me just scale price down a little bit. I apologize. You can see where price broke through this level, come back, retest. Now this is on the monthly. Remember, higher time frame, so you're not going to see the precision that I'm trying to explain. But you can see this area right here, and I'll just do this real quick. You can see this little area right here where just back and forth, something significant, whether it's some type of trade war between whatever it is, I don't know, but this price range between like 1817 to 1825 is pretty significant. So we're going to drop down. Let's go down to the weekly time frame, and you'll see a little bit clearer indication what I was talking about. Now you can start see where price just blasted through, back and forth, retested. So again, whatever's about to happen with gold, I don't know, maybe next week we might have some crazy news come out. Let's go down to the higher time frame. The lower time frame on the daily. A little bit better. Again, you can see on the lower time frames, you can definitely see how price has been reacting to this level. And that is around like 1826 from 1819. So, and I put here where price realistically, this is what's going to happen at these levels. When any pair reaches a certain price point like this, it's chaotic. So it does one of the two. Obviously, I know each level it's going to respect or blast through it. But for this, it's going to either. Oh, I'm sorry. Close this down.
Yeah, it's very confusing for the
my Lord.
Like I said, it would have been a horrible experience.
Let me bring this in a little bit.
Whatever, you go to the dashboard.
So I put my little drawings where gold's either going to break through, come back, retest, because remember, you have your first initial move, and then you have the impulse, the flow, the order flow, where volume comes in and drives the momentum. Or price is going to respect that area, and gold is just going to massive buyers momentum come in. The bulls are going to come in and absolutely take over the market for gold. With that happening, that means that the US dollar would have to become extremely weak, or we'd have some fundamental news that would just give us that nice, whatever you want to call it, like I always call it, the push, the monument change, the whatever you want to call it, the trend change. But definitely when fundamentals come, they give it that nice push. So going down to the smaller time frame, we're on the 1 hour now. You can see a little bit clear. I'll zoom in some more. And this is what it does. This now price with gold, again, this could go on for the next month. This could go on for the rest of the year, where price just plays around highs and lows in a complete range where it's realistically moving maybe 100 to 200 pips back and forth daily. So best advice for gold right now, I would personally say maybe scalp it if you're trying to just pip and dip, get in, get out. But it's going to be a little bit harder to throw some swing trades on gold unless you see that. Remember, for my entries, this is what I look for. Like if we're on these levels, and on most, if you're on an area of support and resistance, and we're breaking through, we're always looking for the break, and then that retest, break, hook, and go. Whether it's a buy or sell, break, hook, and then go. So you'll look for that candlestick that definitely gives you, it paints the picture for you. Now, again, if you're new to these lives, if you haven't watched any of my previous videos, you're going to see that I do clean charts. I don't do moving averages. I don't do indicators. I don't do Fibonacci, all that stuff. Not saying that it doesn't work for some of y'all. Like I know a lot of you guys will message me and say that the way you use Fibonacci is just like your third confirmation for whatever the story is you're trying to tell yourself. Whether it's I'm looking for a sale and I had this divergence, all this, but realistically, you're just creating a false story for yourself. Like you shouldn't be having to convince yourself of why you're getting in the trade. Set the trade. Again, always have your risk management in place. Always, always, always. I can't scream that enough. Like your risk management is everything for your trading. I know I absolutely hate Instagram when I see these people say that you can risk more than 1% on your account, especially if it's like if you're practicing on a Surge Trader account or you're doing an audition for any prop firm and you're risking 10 to 15% per trade. That means you can only lose 2 to 3 trades, only 2 trades, and you're going to completely wipe the account. So then you're going to have to refund the account, or buy a new challenge account, whatever it is. Why do that? Why get to where you can only have 1 or 2 losses? Why not have 20 or 30 losses? You can see where you went wrong and have just 2 to 3 wins that completely wipe 30 losses. That's the whole point for me when I'm doing swing trading. Low risk, high reward. And the reason I'm reiterating that is because I've seen some posts about people talking about maximize your risk to maximize your reward. That means you don't have the skill to trade. If you have to throw 100 to 200 pip stop loss to do 100 or 50 pip gain, that means you're just gambling. You're completely gambling. You don't know what you're doing, and you're a demo trader. You're just an influencer getting paid to flaunt a demo account. That's what that is. But anyways, I'm gonna get back on track. So again, for gold, just look for on the smaller time frames. And smaller time frames for me is 15 minute, 30 minute, 1 hour. That's 5 minute. You're not going to be able to tell a really clean shot, because if you go to the 5 minute, you can see right here, price is just going back and forth, back and forth. You can't really get a clean story on what gold's doing. We're looking for buys, we're looking for sells, but the one thing you can see with gold, and I know I apologize, like a lot of y'all have been asking me to go over other pairs. Gold is my baby, so it's just the levels that I can detect immediately without putting any lines, anything on there. But you can see we had our entry here, how I went over this entry, back and forth. We're on this zone, and price is just, it's not necessarily dead. You just have whatever it is. It's how the market works. You got seller orders coming in, you got buyer orders coming in, you got just whatever moves the market, whether it's the banks fighting each other or trade wars, whatever it is, I don't know. Gold's moving sideways, and yes, it pisses me off too, because this is for me. I am in this buy right now, and holding this, especially getting swap fees, or if they charge the commissions over the weekend and stuff like that, it'll piss you off. Like you're like, oh, I'm done with this trade, and that's fine. Realistically, if you're in a trade that's taking 2 to 3 days, and it's just like you're in profit, then you're in withdrawal down, you're in profit, and it's just back and forth, just yo-yoing around, and you're getting anxiety for that, or you're stressing out, just close the trade, especially if you're at a minimal loss right now. Like if you're nowhere near your stop and you're close to entry, it's better to, this is what I always like to, for me, it's better just to close the trade than to take that impatience and that anxiety and look for another trade because you're waiting on something else. You don't want to overtrade, especially like for me, and I have a Surge Trader account. I'm not going to sit there and overtrade. I don't want to trade 10 trades a day or 20 trades a day. I see some of y'all's history, because this is what I remember. There's the first thing I ask is, show me your trading history. Let me see what you've been doing, what's went wrong. And in one day, 90% of y'all that send me messages, I've traded like 30 trades. That is insanity. You're overtrading, and I know trading is exciting, and you want to, like, obviously we're all in it to make money. You're trying to maximize everything you can to where you can make 20 grand a day and all that fluff. But realistically, you want to get to where you're doing 2 to 3 trades a day max, whether that's wins or losses. And especially like if you have 2 losses in a day, that's it. You should be stopping right there. Take a break, come back for the next day, or don't trade. Switch to a demo account, and to where it'll relieve you from that anxiety. It'll take that stress away, and you can kind of just practice on your skill. If you win or lose, it doesn't really matter because you're on the demo account. But then you can still you're still in the market, because I know how, especially for me, like the first 3 to 4 years. all I wanted to do was be in the charts, be in the just whether it be demo account or live account. I just wanted to trade. I wanted to trade. I wanted to test strategies. I wanted to anything and everything. I wanted to be on the charts, and that's what most people screaming like, you're not going to get the result unless you put the work in. That is true, but let me tell you something about watching charts. There's nothing fun. There is literally nothing fun about looking at charts. It will absolutely stress your brain out, your eyes out, everything, especially if you're going from higher time frame to lower time frame. It's just chaotic. You don't know what's going on, especially if you're just starting out. You've got to set a small window. I would say realistically like maybe an hour a day if you're just getting out, or even if you're experienced but you haven't got that point of your success yet where you're profitable. 9 times out of 10, now I know throwing the risk management, all this out the window, 9 times out of 10, you're just staring at the charts too much. You've stressed out yourself to where you've completely forgot your strategy. You don't even know what you're looking for. You're adjusting all your lines because price didn't go away. You're adjusting your trend lines and your levels. 9 times out of 10, you're just over trading. You're just looking at the charts too much. Take a break. Y'all see me on my Instagram. I'm all the time. If I'm going to the beach, I'm going on walks, I'm going on bike rides, I go to read a book, I talk to my children, do whatever it takes to de-stress me from the markets, because not many people is going to say this, but trading is boring. It's boring. Nobody wants to say, oh yeah, my job's amazing. I'm sitting here, I stare at charts all day. I watch price go up and down. No, there's nothing fun about that. The fun part is once you can hone in on the skill to where you can look at the charts 5 to 10 minutes a day and capitalize off that. That's the fun part. Now, yes, it does take time. It takes experience, but that's with anything and everything. You don't see doctors saying, you know what, I want to be a surgeon. The next day they're operating on people. No, 7 to 8 years, 10 years of education before they even get to touch somebody realistically. And then they're going in that. Or athletes, they take years and years to get to the point where they're at. So break that mentality, please, of you just started trading, you're excited, you buy a prop firm account, you've been trading for 4 months and you're expecting to make 20 grand a day. That is unrealistic. That is from the fluff of social media. I can't scream that enough, especially when you see these people that are flaunting 100 grand, 200 grand a day wins. I truly pray for those people, because it is not realistic. And a lot of you guys, you follow them immediately. You're like, oh my God, they're amazing. Anyways, so that is gold. Again, probably be moving a lot of sideways movement unless we have some news. And let me see, I know you guys aren't going to see this screen, but let me just go over here. For Friday, we do have non-farm payroll. We have unemployment rates. So this could be that push for the US dollar, and CAD news. So CAD news could affect the US dollar, could affect gold. So again, be watching for this. Even if you're looking for, like, this is my level, is 1821. And I think I've got it like a 45 pip stop on there. Excuse me. But looking for just on the higher time frame, normally 15 to 1 hour, you're going to see the clear indication candle. That's what I always call it. You're going to see a candle that just gives this massive bullish or bearish momentum that tells you that story. Once it comes through, it blasts through that level, and then the impulse retouch, remember, break, hook, and go on either the buys or the sells. So if we were looking for sales, say this bearish candle right here would be blasting through, and then price comes back, retests this zone, and then goes through. Or if we're looking for buys, same thing. We've got our zone here. Price breaks through, plays around sideways. The range could last whatever, 2 days, 3 days, 4 weeks realistically. And then price come back down, retest our zone. You'll have that nice wick on the body, and then boom. So there's gold. I'll go through the other pairs real quick. Now, we were in buys on this, and as you can see, even on this. Now, so I'm on the 1 hour time frame on UJ, excuse me. Original entry was 146, let's just say 650, all the way up to 150. And then you have this this was where the FOMC news come out, and then there were some more fundamentals, and then US dollar kind of just tanked. Or not US dollar, just UJ as itself, because I think JPY had some great news that come out and kind of just pushed the price down a little bit. But you're talking 150 to 148, excuse me, not many people is going to hold that trade, especially if you're in buys, even from down here. like I close out, but you see this massive wick. I don't even know what happened here. I think this was this week news, which is absolute chaos. But as you can see, UJ still performed well. You could have capitalized off close to, I don't know, I think that's 500 pips right there. And then we will go to GJ. GJ, oh my God, look at this. And if you go back to my very first live, I think it was my first live or maybe the second, we went over this. 186 to 179. And even realistically, whatever this news was, pushed all the way down to 178. So I don't even know what to say about that. That speaks for itself. Literally, I marked this up completely, showed y'all what I looked for, why I was looking for the sales, and you can see how price just played out through these levels completely. Now let's go through this one. I don't know if y'all might have forgot about this trade. I didn't call this, I explained what I was looking for on this trade. Just push this sideways a little bit. Let me zoom in on price. I apologize. And look at that. This is why I love swing trading right here. 40 pip stops. And yes, I did take this trade. 40 pip stops to around, I think that was 300 something pip gain. Excuse me. That's a swing trade. Beautiful. One loss on a swing trade. 2 losses, 3 losses, 4 losses, 5 losses. You can have probably close to 6 losses on a swing trade, and 1 win. 1 win wipes all those away. Now I know if you're going to say, yeah, well you can't be doing that on a prop firm because you've got a daily loss limit, stuff like that. Understandably, that's where just lower your lot size. The consistency in your lot sizes is huge, especially on like Surge Trader account. You want to have consistency with that. You don't want to be rushing it. You've got an unlimited time amount if you're trying to pass the challenge. You don't need to be doing 5 lots, 3 lots, 10 lots. And for me, what I want to say to y'all is like, ask yourself why you changed the lot size. Were you in a win and you become confident and you're like, okay, I just got all this profit. Let me up this up. I'm about to pass the challenge. Because 9 times out of 10, what happens? That trade where you up the lot size has a loss and you just wipe all your progress. I used to do that all the time, especially I was practicing on the Surge Trader demo accounts, just testing out the for the leverage for each different pair and stuff like that. And even with consistent loss sizes, you know you got like the swap fees and the commission stuff like that. So you got to be real careful trying to take 2 or 3 trades to pass the account or pass your audition to get your funded account. Be careful with that. That's the whole reason prop firms have that test, is to prove that you understand what you're doing and to prove that you can have consistency and stuff like that, and you're not just gambling, throwing a 20 lot or a 30 lot on gold or something like that, and you're either going to make or break the account every single trade. That's dumb, wasting money. Don't be like that. Again, so there's GBP CHF. What I'd like to do, and then we will end this. I don't want to take a lot of y'all's time. I know most of y'all are probably working. So let's go to EUR USD. Let's just do a clean chart markup just because I love doing, at least I want to keep consistency every single live to show y'all how and what I do when I mark up. And EU's been playing beautiful level, so it'll work out perfect. So first thing, monthly time frame. Let me just remove all this. Remove drawings. I start from a higher time frame. I immediately go to the line chart and I look for like the peaks and valleys of around current price action. And by current price action, I mean this area right here. I don't really care about 1.56. If price is at 1.05 and we're looking at a 700, 7,000, whatever it is, pip difference, not realistic. So I don't care about price all the way over here. What I do is I'm finding my zones. I don't get all crazy. I'm gonna say this every time. You know, I don't get on the wick. I'm on a line chart, so I can't even look for a wicker body. I just boom. It takes me normally around 5 minutes. Now, if I wasn't talking and I was just sitting there marking up, you will see how easy it is. I'm just barely even looking. I'm just peaks and valleys, like the peaks right here, bink, bink, valleys, That's it. Now, for me on the monthly, that's almost too much. That's too much right there. I want to keep clean, clutter-free, nothing chaotic on my charts. I don't want to have crazy colors. If that works for you, that's fine, but it will stress your eyes out if you're sitting there staring at price all the time. So on the monthly, and again, you can change these lines, you can change the colors, you can put right here, you can right click, and on the settings you can go to text, you can put these are my monthly zones so that you know if prices reach in that area, that's going to be a pretty significant area. Like if I was going to do that, I would right click this zone right here because I can see all the way back to 1999. Price was pretty significant area here. Basically same as gold.
Yeah, that works.
Prices hit and tested here on this zone, traced off, playing around. So that is where EUR USD is a very significant zone right now. So you could change that line, color, whatever. Going to the weekly, seeing if there's anything I missed that I could maybe add an extra line, but again, I want to keep it clean. I could maybe, just because this low little break right there, boom, and we got a story. We already know on the higher time frame, EU is at a downtrend. Downtrend's easily spottable on a higher time frame. You have a downtrend, and you have an uptrend, just like this. It's easy. You guys are, a lot of y'all, you go too in detail. Like you're looking so hard for different things. An uptrend is when price is going up, and a downtrend is when price is going down. Not every uptrend has the built ladder of higher highs and higher lows and all that. Not always. Sometimes price just blasts through, so you don't know what you're looking for. Just look on the higher time frame. You can see the trend, and don't counter trend. Don't counter trend trade. So we're on a downtrend on EU. All right, we've got our zones. For the weekly, looks pretty good. Maybe you could put one here, there. Now again, this, for me, that's too many zones already. Like it's already too many lines, kind of getting disoriented with it. You want to keep it clean and clutter-free. Go down to the daily, beautiful. Go down to the 4 hour, everything's still looking good. We got enough data with our support and resistance areas, supply and demand zones, whatever you want to call it. We got enough data marked up to where we can base a lot of how we're going to be trading, what we're going to be looking for, if we're going to be looking for swing trades, intraday trades, anything like that. We've created enough details to paint that story for us. So now I'm going to go to the line chart. I'm going to go to the candles. Oh, I'm sorry. Not just regular candles. I'm going to show you, excuse me, just how much price plays, and you can see how the candles will tell you the story. And I didn't do any trend lines. You've seen again, I didn't put price on the bodies or the wicks, anything like that. And look how price plays at these zones. That's why I go to the line chart, because it gives you the most, I would say, the most accurate area for that peak and valley, that support and resistance line. You can see 100% where even right here, price was support, came back through, blasted that support, now become resistance. Price retested just to make sure. You have the initial move and then the impulse. Remember, boom, same thing. Price broke through this zone, retested, have your impulse move. Price come back through that, back again, play through. I mean, you can sit there and look how, again, I'm only just showing you guys the lines, the zones off the line chart and how it plays out on the candles. Now I'm still in the 4 hours, so I can go down to 15-minute and it's going to give a completely clear indication on how those candles are moving around those areas.
If that's the case, then other people that are using it should start servicing. But
all right. So we have our levels, and I think my headset's about to be dying, so I apologize if my audio switches and I don't know. But okay, so we have everything marked up, we have our levels, we go to the 1 hour. Now I'm going to real quick, because I don't want to take a lot of y'all's time. It's already been 24 minutes. I apologize. And in between these zones, I like to call the heart line. The heart line, you're going to hear this every live. The heart line is just the center of the zones where price plays around. Same thing how the heartbeat does. And when you look at those monitors in the hospital, it's just back, forth, back, forth. That's where you're not looking for entries for a swing trade. You're looking for entries for swing trades off your zones. So you're looking for buys, sells, and this, the heartline area, that's for the intraday and scalpers. By intradays, I'm talking about the 1 hour, 30, 15 minute. You can see where the heartline price can retrace. You're on this massive bullish momentum off your swing trade on the, like right here was a buy, and then price gets to that heartline, which is in the middle between these zones, and then price completely retraces, and you see it just blasted through all these zones. So that's why I don't like to take trades at the heartline, because you really can't give a clear picture on which direction price is going to be going. It gives you a much better indicator off the supplier or the demand zones, support, resistance, whatever you want to call it. And then so for me as a swing trader, I go from 4 hour. What am I looking for? I see that price, this is just me. I see that price blasted through this zone, come back, retested. This isn't really an impulse move, so price could still do this. For an intraday trader, you could do this. Looking for just a short intraday trade, we have 105, 275 to, we can just do literally 27 pips for a, what is that, a 70 pip gain, 60 pip gain. And then once price retests this zone, might play around, come wick up, price trap all the sellers, come back, hit their stops, and then you'll have that clear candlestick that I was talking about on the higher time frame, where price is just going to just boom, blast through. And then even on this, on the retest, on the smaller time frames, you'll see where that break, hook, and code comes from, even on a retest. So smaller time frame, 5 to 15 minutes, you'll see a candle, a massive bearish candle, and then this is where, that is where your indicator for the sell would be. And then for the swing trade, I would go for at least the next zone. So you're talking, excuse me, 105 to 101. That's a 400 pip trade for 40 pip stops. Beautiful trade. Also, you could go a little bit above, like if you're waiting for that, and you could put your sell limit here, you could put a sell stop here. That's just the beauty of trading. And that's it. Like some of you guys are gonna be like, well, how do you know? Like, what are you doing? How do you know to look for the sell? Higher time frame, we already see the downtrend. We see how price is playing through the zones. We see how price is reacted to the current price action zone right here. Now we're waiting for a little retest, and then we go. If price played around this area and was respecting this, and then I see that it's coming up, coming down, coming up, coming down, and just playing on the zone, I'd be looking for buys. It's telling me that that support, that foundation is strong enough where price is holding that area, and the momentum's about to shift for a bullish, maybe a 300 to 400 pip range. It's literally that simple. You guys you're looking for too many indications on why to get in what trade. You can already see from these little heartline zones, we had this nice little bearish play out through here. You see where price is just back and forth, step ladder, step ladder. All we're doing right here is just a continuation of that. So I'm going to leave this here. We'll come back next week. I hope y'all have a wonderful rest of your week. I hope y'all have a wonderful weekend, and I will see y'all soon. Hopefully next week, my guest will be here. My good friend, they just had a baby, so couldn't get him on, but moving in the right direction.